Hello, everyone. My name is Igor Tomic, and today is an episode of the Fintech Garden with a quite trendy topic: the fintech's next era of the and mechanism behind the stablecoin payments. And today with me is Chris Mason.
Thank you, Igor. Pleasure to be here.
As usual, we're always starting with the understanding your background and your past experience. So, can you give us a little bit of your background, what you have been busy with?
I guess I've done quite a lot in my career, given my advancing years. But so I started out as a chartered accountant and escaped from accountancy relatively early. I worked for Citi for around about 14 years. Did an internal startup there, which is commercial cards, supplying kind of T&E cards and purchasing cards to the largest corporates, I guess, in the world, the Shells of this world, etc. I ran WorldLink, which is probably the largest cash management product within Citi that focused very much on cross-border payments. So that was probably my first taste of transaction banking and transaction banking management, cross-border payments. I then spent around about 10 years in the credit card acquiring business, in prepaid as well, before starting Orbital nearly 8 years ago. So, yeah, I have experience in kind of many corners, I guess, of financial services.
That's the best way maybe to understand the real needs of the world, and then having the gears and all the abilities from the tier one banks then to jump into the industry and try to build something which is competitive and adding values for the customer. So
Well, we're still trying anyway. We're still trying, yeah. So
but that's definitely a long road, because I would say the nowadays is different. If you compare it to the business, I don't know, 10, 15 years ago, the things are moving much faster than it used to be. And I think the technical abilities and the financial abilities is totally different, because I don't know, imagine 15 years ago, that's a discussion between banks, tier one banks, and maybe even neo banks, who is going to compete who. And right now it's much, much larger landscape. We have blockchain, we have stablecoins, we have tech giants who have a taste of the financial industry, as Apple and Google facilitating those payments. And I would like maybe to start a little bit with the context of the current payment infrastructure, because the cross-border, as you mentioned, existed a while ago, and it's been existing for a really long period of time in the history of humanity, because we always had the need to move the funds to facilitate business operations, personal needs. So what do you think, or what is your vision? What is different like for 5 last years? Because we had seen tremendous changes in perception and an ability how we operate with the financial instruments.
specific to cross-border payments you're talking
Yes.
about, yeah. I mean, I think 15 years ago, there will have been, it was very, very kind of, large bank dominated. Swift was really the main mechanism. And I think, obviously we've seen a lot of entrants on the fintech side. I think cross-border payments is, when you look at domestic payments, and, I think everybody on the consumer side transacts very well around the world. Visa, MasterCard works great. Apple Pay works great, Google Pay. And, even if you go into emerging markets, they all have their wallet infrastructures. And, so I think cross-border payments is the area that really hasn't necessarily been completely solved, although over the last 15 years we've seen huge strides and new ways of doing things, and pooling lots of funds around the globe, where if you've got large balance sheets and things like that to make things faster. But the essence of cross-border payments before stablecoin arrived was, still the rails are Swift, which is pretty clunky, I think we would say. Yeah.
That leads to the question. I feel like usually for the founders, it's finding some kind of challenge that you think that you're going to solve better than others, or at least try. So what were the triggers for you to think and start the Orbital?
Yeah, I mean, in the beginning, the very early idea was, and this was 8 years ago, there wasn't a huge availability of multi-currency banking for the tier below the groups that Shell and Citi and JP Morgan serve. So they're effectively focused on the very largest companies globally. But then the next tier down was really having to go to multiple different banks to get, one bank to get their euros, or another bank to get their US dollars, etc., etc. I think a lot has happened in the last since we started Orbital, and there's many firms now offering multi-currency transaction banking. I think we had a particular customer who was trying to transfer money, between borders, and it was particular problem. And we latched on to the stablecoin thing relatively early, so 7 years ago. And really then we started to build our business in a very similar way to, say, a cash management bank would, but like Citi, etc., etc., with all the controls and user access and compliance and all of those things, but with stablecoin added in. But certainly stablecoin then became the kind of the dominant product that people were interested in. So that's very much the lead product today. And then the traditional side of what we do is more of a complementary kind of on and off ramps mainly today. Yeah.
That's fascinating story, and I would like maybe to see and understand how it was 7 years ago. Because if you take a look on stablecoins right now, there is a really good acceptance from the regulators. We have MiCA, we have CASP, we have different ways how to operate and have the blockchain and stablecoins emerged and fusioned into the financial services. But what were the challenges back then, 7 years ago?
Yeah, I think the Western world caught up relatively quickly. You will see that probably there's not that much change in some emerging markets over the 7 years, but certainly, I think over the last 7 years, the markets have become obviously as regulation has improved, and it's still not all the way there. Even in more mature places, I still think we'll see a MiCA 2, as it kind of, settles down, etc. But certainly, the crypto markets in terms of exchange in the Western world will be becoming more and more perfect, a little bit more like the, doing currency exchange in majors in the traditional world. So it's certainly, matured a lot from a exchange point of view and a controls point of view. Certainly from a compliance point of view, it really was the Wild West 7 years ago. And, there were lots and lots of firms that wouldn't have had much in place at all, So I think that whole wave now of more regulation, more compliance has resulted in, more kind of a market that mirrors more the traditional world. But then if the traditional currency world, I mean, but if you compare that to, say, some of the emerging markets that still haven't caught up on regulation, you've still got quite imperfect markets for exchange, and you'll have liquidity providers kind of operating under the radar. And so around the world now, I think we're starting to see regulators in most emerging markets really kind of take a grip on crypto regulation, and I think with that will bring more compliance and more kind of perfect markets from a kind of exchange point of view. So there's huge premiums around the world, and we run an index that shows where those premiums are and how much more expensive it might be to buy USDT versus US dollars or something like that. But I would predict that as regulation catches up in all these markets, then the crypto market will start to mirror more the traditional market. But today, in many, many emerging markets, it's still the same as it was 7 years ago. And then one more point would be that the technology is now catching up as well. So I think the kind of real time executable rate thing has become kind of mainstream to a degree in the Western world. Everything works via API, etc., etc. But once again, in the emerging markets, many emerging markets, we're still operating through OTC desks and managing transactions manually. So, as regulation improves, I think a lot of these things these barriers will get broken down and it will become more efficient.
That's true. That's true. And I think digitalization is not like at the same rate across the globe, because definitely there is markets where even the smartphone penetration and ability is different. And that's why if we take a look from the customer perspective, it's different need, different value, which is generating the product. And that's why I think it's different. But I'm trying to go back a little bit in history. And I assume it was really bold bad to go into the stablecoins, and you had this amazing experience in large institutions with the fiat world. Like, what was the bad or the goals that you put by choosing the stablecoin? Because right now it's easy, everyone is a buzzword. Like if you go cross border, potentially stablecoin. But what was the decision making process back then?
I think it was more of a an acute problem that some of our customers in Western Europe were experiencing. And I think obviously the first adopters of stablecoin tended to be higher risk businesses as well. Now I think we're seeing a big shift towards everything from marketplaces to software to payroll, remittances. So we're seeing a lot more adoption now. But in the early days, one of the reasons why Swift has been difficult, and is because US dollars is inherently difficult. So there's been kind of choking of a lot of industries and customers, certainly in emerging markets, which would generally, show bright red on the risk scale. So you've got, say, a risky industry, operating in an emerging market, and then that would kind of drive the need for an alternative because they're getting choked out of US dollars. And then there's, very large premiums, let's say, where they do find institutions that can help them with the traditional routes. They're charging them a lot more money. So, I think the main drivers of say, the reason why USDT today is so liquid is because, that the availability of US dollars in a lot of markets. And, there's also been this kind of currency destabilization as well which is, goes back in time. You look at Turkey or Argentina or whatever, do you really want to hold your own currency? And there might be legalities about not being able to hold US dollars. So that has driven people towards a digital currency. So as you've got more and more ownership in businesses and individuals, then that's really driven the kind of the requirement, I suppose. So it's all about a problem solved, isn't it? These things. So I think in the early days it was very much, certain industry types that had very kind of acute problems, and that's the reason why they were looking for alternatives, I suppose.
That's a definitely takeaway for this episode. I'm usually trying to kind of recap and understand what our listeners can learn. And that's definitely the essence of doing business, because sometimes the infrastructure in the market propose the way to solve the issues the specific way. And moving the funds, one of the essential question from the customers, despite of being individuals or even the business customers. And I think sometimes large organizations, as I don't know, Swift or others, they thinking that they can give only one way to do the rails and transactions, and omitting and even not thinking about the other potential customers. It's another maybe example from another industry that I really like is the MCC miscode with the gambling. So
Yes.
it's pretty interesting story, because in one way, Visa is acknowledging that it's a legal business, and MasterCard. So networks saying, yes, it's a business. The government's working. There is a licensing process. But another way, they're not able to acquire the funds, which create huge gray industry, which is MCC encoded. And sometimes by not thinking that there is still a need and not solving the original question, it creates an ability to merge into the legal models. And I think that's why the stable coins are so popular. So the takeaway, even if we think as a large organization or industry leaders and monopoly that you can push the certain way the market, it doesn't work this way, because that's the essence of capitalism.
Yes.
The need always will find own way. And it's pretty nice. And I think that's a good lesson for our listeners, for the founders or the product managers. Even if you think that you can educate and restructure the need, it's not always possible. The model will find this way.
Find a way,
so, yeah. On top of this, that's clear. So we have pretty good setup. There is a need. And the need is not served by the market that it should be, because we can find better regulations, better way to solve the needs. And I think one thing that you mentioned, that regulations become better, and it comes hand in hand. So the business is legal, the transactions are legal. Yes, there might be some alerts on terms of the compliance and fraud checks, which essentially manageable. But what do you think changed with those regulations? Is it a good move? And you mentioned MiCA too. What do you mean by that?
Yeah, I mean, I think you make a great point about I'd just like to pick up on what you were saying about MCC miscoding. I think you're absolutely right, but the the rules that Visa Mastercard set, for example, were around coding transactions, allowed issuers to say, well, I want to decline a gambling transaction or this type of transaction or whatever, and and then a lot of it was really driven by chargeback. So all perfectly legal, but then you've got different people in different pockets of the chain that have different risk appetites. So it's and as you say, then what happened was, people start miscoding, so that goes against the Visa Mastercard rules, and but essentially, it's from a legality point of view, is probably not a problem. So then, when you move to kind of stablecoin, I think from a stablecoin point of view, there's obviously legalities in the traditional systems, or there's money laundering that exists all over most payment networks, and I think the fundamentals compliance don't change at all. It's like is the funds illicit or not? So going to your question, I know this is a long way around, but going to your question, I think regulators are concerned about stablecoin, in that there's probably a different set of organizations such as ours that might be handling those stable coins. So that I think, despite multiple fines worldwide on all the major banks and things, I think there's a comfort with what happens in the traditional world. I think what's happening now in the stablecoin world is that if you look at MiCA, MiCA's pretty strict. And my view would be that stablecoin provides a great opportunity for far more visibility into transactions and source of transactions because of the blockchain, et cetera, and I think as compliance officers start to, and it's not just compliance officers, it's compliance officers in banks, it's fintechs, and particularly regulators and the lawmakers that set the regulations. I think as they start to understand it, better and better, they will start to realize that you can mine a huge amount of data from blockchains to really show you, what sorts of patterns you've got, and whether it's as simple as avoiding taxes, or whether terrorist financing groups are moving money through the chain. So I do think that the regulations may be going like a little bit too far. Say, my personal view is, MiCA is in danger of killing the use case somewhat, but equally, I think as it starts to mature, and as like people's understanding improves, then there'll be some like very clear changes that will kind of maybe bring the problem solved into a kind of like what I could call like an easier territory, let's say. But still, you may get, far higher compliance comfort, should we say, in terms of, anti-money laundering and counter-terrorist financing and whatever.
Totally agree. And I really love the example of Goldratt, the book AIM. And he stated that getting a new technology and still doing the things old way doesn't bring much values. So I think that's a learning curve for the industry, because we have much better instruments right now, like a blockchain. You can trace a lot of information out of there, and we need to learn or educate ourselves how to properly use it. And that actually overlaps with one episode I will promo a little bit, but recently we released the episode with the Global Ledger, which is IML discovery service, which allows to trace the data. And we had a great talk with Alex. He explained how the company is helping government to trace bad actors in the blockchain, to trace money, and do a lot of which potentially is not possible due to private.
Yeah.
Yes, because you cannot see all the transactions. You cannot go to the banks and see. And that's why that's another question that I have. It's maybe not to you, it's more rhetorical, because Swift announced that they're going to use the blockchain for facilitating the transactions. And I think the shift is that in blockchain, other actors can see what is happening in terms of amounts, and they have enough information to put together who is doing the transaction. So I think that puts a lot of risk in terms of the privacy and proper setup for the operations.
Yeah, and I'm sure, I truly believe that, a lot of the government schemes and the CDBCs and things, a lot of that has to be driven by just more transparency across the network. And I know not everybody kind of agrees with it or welcomes it, but, I think it's I think it's, certainly a way to get, a lot more control. We're spending billions and billions on compliance across the world. Essentially a lot of it is because, there's multiple institutions who are just repeating the same exercises all the time and don't have access to the Swift data, from correspondent to correspondent on the platform. And, so it's a really great example, actually. You might have, say, a cross-border transaction, and there could be, a couple of underlying US dollar clearers, but then you've got, multiple correspondents and layers on each side. So it could be 6 or 8 institutions that get involved in a single transaction. Of course, there's only probably one of those institutions that has a really good view on the commercial substance of that transaction. So then everyone's trying to catch up, and, they're blocking the transaction because it's going into Colombia or something like that. And, everyone's running around, setting rules, but ultimately you have to understand the substance of who's doing those transactions and whether it's really, commercially sound, I suppose. So I do think blockchain can do a lot. And, my view is it's probably going to be the answer to the compliance conundrum, really.
That's the second takeaway. And I would put it this way: understanding versus running the process. Because my assumption that we used to live in the world when we are running the rules without really good understanding how they affect in the business. And I think the need is for the business to understand how the cross-border transfers are working with the full visibility of what is happening, what is expected, what are the fees, because it also falls in the same buckets. Because another issue with the correspondent banks, you never know what is the final amount lands or on your business partner account or for paying, because it's always a little bit of the challenge to understand the number of hops and the fees associated with that. But it slides us to the topic of the liquidity, because you mentioned in the beginning of the episode that emerging markets have a lot of needs for the liquidity, and sometimes those funds operating under the radar. So can you give us a simple explanation for the audience, like what is the liquidity means in the stablecoins payment? Because usually if you do the payments in fiat world, you just take the balance from your account, you are starting the payment, and then it's executed. What is the difference in stablecoins?
I think in the Western world, there's not a huge difference. We would execute what you would call like a real-time executable rate for our customers. So they may send us fiat funds, and then, through multiple liquidity partners that we have APIs with, we would give them a rate and an exchange real time, and then put the balance in, their wallet or whatever. So I don't think there's if anything, it's slightly more simple than the traditional markets in some ways. But I think where you've got that kind of regulation and it's clear and you're able to do that, I think all the technology is there to give people like real time rates. I think things like indexes can be a little bit off, let's say, because you might say, well, coin market cap's a good index, but it's the markets are still not as perfect, let's say, as the traditional world where everyone will be 1 or 2 pips off the center or whatever. I think emerging markets is very different. Where you've got, say, opaque laws. Most emerging markets have some sort of laws now, but there could be quite a lot of them are unclear and opaque. So that's really then meant that you'll get a proportion of, say, semi-gray exchanges that would probably be charging more to buy USDT than you would necessarily be charged to buy US dollars from the local bank. So there are premiums around the world that I think really result from lack of regulation, really. And I think once that regulation catches up, then those markets will become more perfect. So everyone talks about the stablecoin sandwich, being the ideal solution versus Swift, but you will find sometimes that these premiums will mean that depending on the direction of travel of those transactions, that you're going to be like significantly in the money versus a traditional Swift transaction, or you're going to be out of the money. So it really depends, but it is essentially driven by lack of regulation in a lot of the emerging markets. But I think one of the reasons why the emerging markets are so slow to catch up is that many of these markets have currency controls. So the conundrum of how you manage currency controls is a big deal, because because it is a conundrum for a lot of these governments. They're trying to prop their currencies up continually by not allowing too many funds to kind of leak out of the country. But of course, crypto can be that kind of leaky bucket, shall we say. So then that makes the legislation that much harder, because they're having to consider what they're doing about their fundamental kind of monetary policy whilst they set the rules around crypto. So it's a big conundrum, I think, for the markets that have currency controls.
That's a play about the shield and the spear. So the government always trying to find a better shield to protect the economy and the local currency, but there are always the instruments and the tools and new waves of the technologies even allow in different ways to actually get the things that the government or regulators don't want you to do.
It's just like your MCC example, isn't it? It's just people find a way, and I think it would. Sometimes it's just good to recognize that. Because people will find a way. Yeah.
Thank you for quite good explanation of the payments. I would like maybe to take a look into the future a little bit. So what is your view for the next phase of the digital money? Because fairly in the European Union, in the United Kingdom and other regions, there were a lot of discussions for digital currencies compared to the stable coins. And having your experience working with those instruments as stable coins, digital payments, what do you think is the future for digital money?
I think, as I've mentioned, I think there's a lot of catching up to do in terms of from just a compliance standpoint. But I think there's also a lot of catching up to do in terms of understanding of what it takes to really orchestrate a digital transaction. So, I think, there's obviously a couple of very dominant stable coins today, USDT, USDC. Perhaps there will be more entrance to the market. I think it's certainly been tried. There's euro-based stable coins and GBP-based stable coins, but my view is, do they really solve a problem today? SEPA works kind of better than cross-border US dollars or whatever. So, but I think, we might see some platforms that might start to provide some interoperability between stable coins. But I think essentially, to really make payments in stablecoins, there's a lot of components that you need to make those payments. And I think a lot of the announcements that we've seen in kind of partnerships and things, so and so's partnering with so and they're doing, for stablecoin payments and things like that. And I scratch my head because neither party might be licensed, or might have liquidity partners or underlying banks, or even a platform with all those controls that you need to make sure that you can prevent fraud and all of that type of thing. So there's multiple shall we say, tools that you need to make a stablecoin business like Orbital and some of the others. So I think that understanding is going to have to really kind of catch up. So I think there's an awful lot of kind of smoke and mirrors in the markets as time moves on, and people understand all of these aspects in a lot more detail. Then you will start to see a lot more happening. But certainly we need a replacement for Swift. So it's definitely going to happen, and I think it is happening now, and everyone's getting into the stablecoin space. It's just like how much of it at the moment is material versus an announcement because everyone feels that they need to be doing something. So I think it's all going to be like education, and there could be some interesting things that might happen around some of the stable coins that are out there at the moment. People would say USDTs mainly maybe less compliant or less visible in terms of their funds that they have in the background, their capital ratios, etc. But so we could see some law changes around that could mean a shift to other coins and things like that. But at the moment, USDT is significantly dominant in kind of liquidity pools around the world. So it will be interesting to see how that kind of plays out, should we say.
Cannot agree with you more. And maybe I'm trying to do this new approach since we're approaching the end of the episode. I would like you to ask, what is the question that I didn't ask you today? We went through the history, your background, but is there anything that I missed?
Don't know, Igor. I think you've done a great job.
But maybe it's something that you would like to share with the audience. Like, what do you think is important? Maybe the message for the audience.
I think the message for the audience is be get into the detail on this topic. I think the detail. I think there's a lot of, as I just said, there's a lot of kind of there's a lot of opinions out there, and there's a lot of noise, shall we say? And I think for the audience, if you're really serious about either adopting stablecoin as a payment method, or partnering with a company like Orbital to do stablecoins or whatever, I just think it's really important to understand what you're getting into, and it is a very detailed topic. And for us that's been around for 7 years in stablecoins, it's good if people understand the detail, because we're kind of all have traditional backgrounds, and so which has meant that we've become a very detailed business, I suppose, around what we do. So I think that's what's going to accelerate the proposition, is like that greater and greater understanding of what's real and what isn't, I suppose.
Thank you so much. It actually overlaps with the motto of our project Fintech Garden, grow the ecosystem. And I think educating is an important key of growing ecosystem, because the better you understand what you're dealing with, how to operate, how to use the tools, the better outcomes are. And today I would like to thank you. You did a really great job explaining and educating our listeners. So you put a small brick into the wall into education for this exciting and new technology. So thank you for doing that, Chris. It was a pleasure for me.
Pleasure too. Thank you, Igor. Thanks a lot.
And I would like to thank you, everyone who listened this whole podcast episode. Please subscribe to our social networks. Please follow us, ask the questions, and comment if you have any. And we're looking forward to see you on the next episode.